I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Julian Koh, the CEO and co-founder of Ribbon Finance. Julian, welcome to the show and thanks for taking the time.
Yeah, thanks for having me on.
You're very welcome. I'm excited to dive into the world of DeFi. I feel like more and more institutional investors and corporations are getting interested in the future of finance, and it looks like that's where it's going. And I'd love to hear about what you and your team at Ribbon have been working on with this regard. Let's just dive straight into it by getting an overview of what you and your team have built at Ribbon and how you're looking at changing DeFi and continuing to grow it, and then we'll dive into all the details.
Yeah, so we started Ribbon about 2 years ago. Ribbon's, sort of for some context, is the first and largest structured products protocol in DeFi. At our peak, we had close to 400 mil of assets. I think we're currently sitting at about 100 mil of assets. We have traded over $10 billion of option volume on chain. And yeah, we are definitely like the biggest structured products platform in DeFi right now.
Very cool. Great to hear. And for those people that are sort of just getting into DeFi or they're not familiar with traditional finance, can you explain more on what structured products means for DeFi?
Yeah, so there are all these derivative contracts, there are options, futures, fixed income. There's sort of a whole range of stuff that people, of derivatives that people can trade. But generally, I suppose for less financially savvy people, these derivatives are like pretty difficult to understand. Like if you had to come up with some sort of option structure yourself, you have to think about all these Greeks and there's all this like gigabrain stuff. And I think a lot of people don't really understand how to construct like the payoff that they want using options. So traditionally, I mean, structured products are known as like these products which are really simple, easy for people to understand. And on the sort of back end, they use a mix of different derivatives to construct the payoff that people want. For us particularly, we mostly do options-based structured products, and we offer them on ETH, Bitcoin, and a bunch of other crypto assets.
Okay, thank you for that. And as it's not the status quo in crypto, but it seems that it's traditional finance sort of creeping into DeFi. Are you seeing the majority of the clients, and is the platform sort of laid out specifically for traditional finance and institutional clients that are moving into crypto, or is it also for people that are in crypto looking to expand out into these different kind of financial products?
Yeah, I think interestingly, like our main customer base is sort of retail or like crypto whales, so really not institutional right now. And I think like one of the most interesting value propositions of what we're doing is traditionally, if you wanted to go and buy one of these structured products, maybe your bank would sell them to you, but only if you have like only if you're like an ultra high net worth individual or something. Usually these things have, minimum requirements of like $250,000, $500,000. It is generally pretty difficult for like the retail customer to get access to these products. Mm-hmm. So what we've done is really just like replicate the way these products are constructed using smart contracts, making it really, really sort of easy and transparent, and anyone can sort of participate in buying these things from a contract without having to go through like a broker who may like discriminate based on how much money you have in the bank. And I think generally these products have been very popular in Asia, even in like the TradFi world. So I think we've also seen like even in like the crypto version of these products, they also are quite popular in Asia. We have seen the first crypto structured products, maybe they were created by these Asian brokers. They're being sold to like Bitcoin and Ethereum miners maybe 2 years ago. And I think they're just getting more democratized, and more people are getting access to these types of products.
That's great to know. And I feel like DeFi seems to lower the barriers to entry for, in all different ways. And that's a great difference between these structured products in TradFi and in DeFi, really just allowing anybody to use the smart contracts. Is there any other major differences or improvements in how these products are run through DeFi versus in TradFi?
Yeah, I think by far the primary benefit is just like the transparency. If you go to any broker and they'll sell you a product, you have no real idea of like how it's being constructed. Like, are they just resending it to a different bank? Where's the money? It's like very difficult to sort of keep track. And a lot of these products are like a bunch of stuff combined, which makes it even more difficult to track. So I think the main benefit of these stuff is like doing them on chain is like super transparent. You can see exactly which derivative contracts are being sold. Where does the money sit in which contract? What is the logic of the smart contract? Where's the money at all times? I think that is very important, and a lot of our users really like the fact that, you know, they really understand where the money is and how the contract works without just sort of delegating that responsibility to someone, and you don't really know what's happening under the hood.
That's great to know. And I was reading into the products in that you know, they're underwritten by certain institutions. Can you talk about what that means and how that affects the products?
Yeah, so how the products work, maybe I'll start with like what is our most popular product. Our most popular products are these covered call strategies on ETH, Bitcoin, and a bunch of other assets. So the reason why people want to use these products is because, you know, if you are sort of like a yield farmer on chain, if you stick your ETH in Aave or Compound for a year, you probably earn something in the range of like 20 to 30 basis points in a whole year. Basically nothing. But if you're sort of willing to take some risk, if you're willing to sell a call option against your ETH, giving up some of that potential upside for some premiums today, you can get paid almost like an order of magnitude or more. So generally, the premiums that people earn by using our products is in the range of 30 to 50 basis points a week. So basically, you earn what you get paid in Aave in a whole year in a week. Obviously, that comes with risk as well. For example, you are selling some potential upside, so you're giving up some risk. But I think a lot of people like using this product because they find that risk profile really interesting. So yeah, that's our most popular product. And what it does under the hood is you put in one ETH, and the contract would basically sell one call option against that ETH as collateral to earn some premiums today. And for us to sell that call option, we actually need to find like a buyer. And there's actually no liquidity on chain to like sell into an AMM or use another protocol. For example, the sizes we do is something in the range of like 30,000 or 40,000 ETH a week. So like no option protocol in Ethereum can support that kind of volume. So what we do is we work with a bunch of market makers and institutional trading firms, and they come onto our platform and they buy up these call options from the vault every single week. We run like an open auction, and that is really the primary way we work with these institutional trading firms.
Wow, that's great to know. And I feel like in traditional finance, derivatives market is so huge. You know, it's infinitely bigger than the cryptocurrency market is. And I feel like it could be very large inside of the crypto sphere as well. However, it seems it's very, very early. And you know, DeFi has been great in the way that it's grown out in the last 2 to 3 years. But I feel like these other financial products that are in the traditional finance world have still yet to come in and become a norm for DeFi. Where do you see, you know, the derivatives market right now inside of crypto in what you're working with in terms of the market size of it, and then the potential for it as it grows out over the next 5-10 years?
Yeah, so I think in sort of the CeFi world of crypto, these futures contracts are like so popular. I mean, they trade many billions of dollars every single day. But the option markets and some other types of derivatives like interest rate swaps, those are like still really small and really nascent. But I mean, in the traditional finance world, like options are so popular. They have like many trillions of dollars get traded every single year. We think it's still just really early. So I think in CeFi, in crypto, is getting a little bit popular, and in DeFi, it's still like even earlier. So I think, for example, as I mentioned, every week we have these products. They sell, I don't know, 30,000 or 40,000 ETH calls. Like none of the options protocols combined like can support that type of volume. So we had to sort of create this auction mechanism and a bunch of stuff. But I think, in maybe 2 to 5 years, like 30,000 ETH may not be like that big of a size. Like I think that'll be probably pretty easy to sort of trade. But now I think, we sort of have to make do with like using a bunch of different auction mechanisms and other types of clearing mechanisms.
Mm-hmm. That's good to know. And with derivatives being so big in TradFi, do you see that as one of the core products of DeFi when it does grow out? Or what do you think will be, the most popular products that traditional financial investors will want to be using inside of DeFi?
Yeah, so I mean, we think, or I think derivatives are like sort of like the killer use case of DeFi. I mean, derivative contracts are really just an agreement between two people that sort of track some sort of underlying price. And we don't need to sort of sign any papers. We can actually track all of this on chain. We can create any type of derivative contract that we want using smart contracts. And I think, Ribbon's a very good example of taking the underlying options contract and creating like a product that's really user-friendly for people to use. So I do think in the next few years, more application level stuff will get built, which sort of just drives a lot more volume to the actual derivative. But yeah, I think it's still pretty early. We have traded over $10 billion of option volume, but that's over sort of a year and a half. I'm pretty sure in sort of 2 years, we'll probably be doing that every single day or every single week.
Incredible. And what are you doing with your team to prepare for that scale of trading, 2 years from now? And how are you continuing to build out Ribbon Finance to prepare for the next bull run?
Yeah, so we recently announced a new product that we're working on, which is called AVO, which is really a decentralized options exchange. And we think to support this kind of option trading volume in DeFi, you need like a really high performance options exchange, which uses like order books and like a really advanced margin system. So we've been spending the last like 6 months building that whole thing from scratch. We are launching it later this year, but we think that is like the main sort of unlock that we think we need for the options market to sort of grow 100x in DeFi.
Mm-hmm. Incredible. And how easy is it for people to start using the products, if they've done the basic DeFi on, Aave and Compound, and they're sort of looking to get involved in derivatives?
Yep. Yeah. So I think even though all this stuff sounds pretty complicated, if you go to our website, ribbon.finance, I think we do a pretty good job in sort of making it really simple for people to use. And also like we explain the risk pretty clearly. So yeah, I mean, if you own ETH or Bitcoin or a few other smaller ERC20s, go to our website and there's a bunch of different products for you. We've sort of made it simple enough where, you just got to deposit after you sort of understand the risk profile. And if you find that there's something you like, all you need to do is click deposit, and our smart contracts sort of automate everything that happens under the hood. So you don't have to know a single thing about like what option is being sold every single week, what strike, what expiry. Mm-hmm. The contracts automate all of that for you.
Mm. Amazing. Well, I will leave the link to Ribbon for people to check out and learn more in the description box below. Thank you so much, Julian, for coming on. I'm fascinated about the growth of options and derivatives inside of DeFi, and I feel like maybe it'll be, derivative summer next year when the next bull run comes up, and it'll be a big part of the big push. And I'm hoping that helps you guys as well. So thank you so much for the time. All the best with Ribbon, and let's follow up in the near future.
Thank you.